Is that a way that we could possibly find deals? Or
that hasn't been my experience.
How have you been able to?
It's all brokers.
All through brokers. Mm-hmm. And how have you cultivated those relationships? Because I've talked to some brokers, right? And it's like, who the fuck are you?
Exactly.
Why would we?
Who the fuck are you?
Exactly. I'm really? Nobody.
Yeah. Look, pull in the spot. Oh, watch how I drop. Believe it or not, this isn't all that I got. They told me to rock. That's not how I rock. Now I gotta pop Madonna.
Hey, what's up, guys? Ricky in the Flip Lab, and today I have a special guest, Ben Leybovich. I actually first learned about Ben years ago when I first got into real estate, reading Bigger Pockets. He had a bunch of awesome blogs and articles about house hacking and getting into multifamily. For those of you guys that don't know Ben's story, he was born in Russia, grew up there. A life-changing event made him go from thinking he was going to be a violinist to have to transition into real estate. I heard your first deal was kind of a flip like I think we do, quick $20,000 single family house. Yeah. And then and now he's transitioned into syndicating big multifamily apartment deals out in the Phoenix area. If you drive around Phoenix, you're going to see Haven communities all over the place. So it's a pleasure having you, Ben.
Thank you so much, Frankie. It's a pleasure to be here with you.
Yeah, absolutely. So what I really want to know is, how did you go from that first flip where, it was a single family house? I think like a lot of people watching this, that's what they want to get into. Find a deal, get it under contract, make a quick 20K. How'd you go from there to where you're at today, syndicating 100+ unit apartment complexes?
Well, so that's a loaded question, right? Yeah. First of all, it took over a decade of progressively getting better at what I do. It also took over a decade of progressively getting more balls to take on larger projects. I mean, I don't know how else to put it, really. Last deal I closed was $45 million. Do you start there? Really? No. You can't even visualize it. You can't even conceptualize it, right? So I think the answer basically breaks down to, I wanted to make more money than I ever could in single family or small multifamily. And also intellectually, I was bored in the smaller stuff. And it was just like I reached a point where I looked at myself in the mirror and I said, this cup's full. I can't do this anymore. It's going to make me sick to do this. I've been there, done that. I know all about doing that. Now what? So I don't know that it's necessarily the money that drove it. I think more it's a personal growth story, development, that, intellectual worth. It's a bad feeling for a guy to hit a wall and like, what's next?
Yeah.
What now? So this search for thyself is probably what mostly led me to.
Yeah. I mean, I kind of look at even like my journey now, like you don't really know my story, but I came from New Jersey. I was working a corporate sales job, quit my job in 2019. Now the last 2 years we've been flipping single family houses. Me and my business partner, Steve, he's also a Russian, just like you. He's super happy to.
Privetik, Steve.
He'll appreciate that, whatever that means. Sometimes he'll be yelling at me in Russian. But the last 2 years we've been just wholesaling and single family flips, kind of I think where a lot of people start out.
Sure.
This year will be our first year. We'll do over $1 million, probably net profit, which is great. My life's changed so much better than where it was, but I'm already starting to feel like kind of, what's next in this game, because flipping houses to me, I still have a job every day. I need to wake up, my phone rings, I need to answer mail calls. Wholesaling and flipping is a job, and it's not easy. Would you agree like that?
It is. It's a very difficult job. And for the amount of stress that I don't think it warrants the amount of effort and the amount of stress. So my perspective is everything is a job. There's no such thing as passive income.
I agree.
Zero. It doesn't exist. You just have to choose what type of job you want to do, and how much you are willing to do it for, or in exchange for how much money you're willing to do it. So that's what it comes down to. Like for me, and it sounds like you might be kind of hitting the same place in your own personal development. for me, there came a point where I said, I have enough of a portfolio. I could buy more. I would have cash flow. My family would be okay. Everything is fine and dandy. But now what?
Because for a while you were there then buying like kind of smaller multifamily in Ohio, right?
Exactly. Duplex, triplex, fourplex, 10plex, sixplex, that kind of thing. And that was fine. There's nothing wrong with that. But it's not who I was. I just wasn't that guy. At a certain point, I stopped being that guy. In the beginning, it was exciting because it was something different from punching the clock. Right. It was something different. It was, I felt certainly a certain amount of latitude, freedom, call it what you want. It was real. But I made $1 million in the last 3 days.
Right.
So this is different.
Yeah.
This is a different kind of game. And so the question becomes, money follows knowledge. Flat out. No question about it. Money follows knowledge. Knowledge is one's ability to deliver a valued service to people with money who really need it. The better you become at providing something that wealthy people really need, the more money you're going to make. And so when I realized this, I said, well, do wealthy people need fourplex? Or do wealthy people need a place to put their money so that it grows really, really passively for them? And so the difference between you today and me today is a gap in intellectual worth. That's all it is, because otherwise we're the same guy. And so you can get there if you learn.
Yeah, and I think that's where, like, I look at real estate too. And one thing I try to avoid is kind of that like shiny object syndrome where, one guy is crushing it in mobile parks and this guy's, buying whatever, commercial buildings. So it's a fine line between like getting really good at, we chose kind of flipping single family houses. So me personally, I was like, let's make at least $1 million consistently before we start kind of opening up our blinders to other things. But one thing me and Steve have been talking about, and even what we utilize in our flipping business, like our average deal size this year is around 70,000. For single family flipping, that's a pretty good average deal size. And the reason why is we're a little lazy. Like we don't want to, the same amount of work requires when we make 70,000 versus 7,000 wholesale transaction. So we're trying to increase that deal size, but 70,000 average deal size compared to you, and the deals you're working with.
Yeah, I wouldn't get out of bed for that.
Right. You're not even getting out of bed for 70,000. So it's kind of like, I'm wondering personally, like for us, how do we transition from where we're at now to not getting too far ahead of ourselves?
Well, but my question to you is, why would you want to? So success in life is a function of what I call unfair competitive advantage. Unfair being kind of the operative word. So you and Steve, the Russian dude, you clearly have an unfair competitive advantage. Listen, everybody would love to do $70,000 net profit deals in Jersey. Fuck, there's nobody living in Jersey. How the hell do you even do that in Jersey? That blows my mind that you do that in Jersey. But you do that in Jersey.
All in cost is 160, selling for 300. Yeah.
This is what I'm saying. So why would you want to transition away from something that's allowing you today to make $1 million, in terms of profit, and you could scale that and you can grow it? Why don't you just take that money, stay a professional in that game, and then invest your money in deals with guys like me and be completely passive about it?
Yeah.
And still get your depreciation and still get your appreciation and still get your cash flow. I mean, this is a thing that I speak to a lot of high net worth people. And once in a while I get a call from an attorney or a doctor, and they're thinking about transitioning to do what I do. And I'm saying, are you crazy? You've just spent hundreds of thousands of dollars on your education. You have a piece of paper. You've passed the bar. You have such an unfair competitive advantage against the vast majority of the population. You're going to give that up to try to do what I do, that's just stupid.
Yeah.
Like, I want to be you. I just want to stroke that check, give it to this guy to double it for me.
Right.
Like, that's the ultimate. You've arrived when you can just do that. So I challenge this notion that you need to necessarily become me.
Right.
Because you can already build a business where you can make each one of you several $1 million a year if you wanted to.
Yeah.
And then just invest it passively.
And then get into passive stuff. And yeah, we've kind of thought about that too. I guess it's kind of like to your point though, sometimes, now 2 years of just consistently kind of grinding in the business, and me and him, it's just us. We have like one VA, so we're not like a lot of these wholesaling, flipping operations with this office, 20 employees kind of doing.
So why don't you build it?
Yeah. Our thought is we never wanted to kind of have this like big operation. Like, it seems like you're very involved within your business. I don't know what your business looks like, but it seems like you're not having to manage an office of people, from what I've seen from the outside.
Well, and that's because our assets are large enough so that we can pay payrolls and put people in place and hire all of that day to day out. It is true in my position, I'm able to be more strategic, although we do have, between construction and office, we do have 7, 8 employees already, and that's growing. It's true that I don't personally myself spend day in and day out at the office, because my job is to create opportunity, and opportunity exists outside of the office.
Yeah.
So this is why you hire people to do the things that free your time to create additional opportunities, so you can hire more people, and the whole thing just snowballs. So you're working in your business instead of on your business is a cliche, but it's true in your guys' case. So my question to you is your time better spent trying to figure out how to be Ben Leybovich, or is your time better spent trying to figure out how to remove yourself from inside of your business and start working on your business and hire the people to run it so that you don't feel washed out?
Yeah. And I think that's where, I always look at just my personal worth and skill sets. Like I come from a sales background. I know how to talk to people. I know how to network with people. I'm very good at acquisitions. I know how to buy deals deep. So a lot of the times I'm like, well, if I give that up, like that's like at this point, my value. Should I be spending though my time maybe learning how to, learning the skill sets that you learned on how to get into bigger deals, increase my skill sets, so I can bring value in different ways than I'm currently, bringing today.
Well, that's a personal, I think, call
Yeah.
at the end of the day. If you really want to buy large real estate and syndicate and do all that, I'm certainly not going to tell you not to do it.
Yeah.
I'm just looking at the situation as you describe it, and I'm wondering if it would be the quickest path.
Right.
Because you're looking at me, but you don't know the skeletons in the closet.
Right.
And I'm not about to tell you. So there's been a lot of price that's been paid,
A lot of learning lessons
in
right?
order to arrive at this point. So I'm just giving you the benefit of, hey, wink, wink. You've
Yeah.
got something special. Think twice before you, instead of focusing on exploding that, try to shift tracks.
Yeah. What would you say, I mean, when you kind of transitioned from the single family stuff you were doing early in your real estate career to where you're at now, apartment syndicating, what would you say is the biggest change in skill sets needed to be successful? Because you were pretty successful doing it.
They're completely different. There's almost no, they're parallel. They almost don't overlap. In fact, I tell people that, I thought I knew a whole lot. And I did know a whole lot. But what I had to do at a certain point was recognize that I had to forget everything I knew.
Yeah.
I had to literally forget everything I knew, because my mindset had to shift. The way I think about business, real estate, all of that had to change. in order to understand syndication.
Yeah. So would you say, like, am I better off in possibly learning those skill sets, having this flipping background compared to that doctor you were saying? Or is it almost, it's almost like a completely different ball game where what we're doing in the flipping doesn't
If you
even...
think you're going to apply your marketing skills to large multifamily, forget it.
So we've been, I want to get into that because Steve's all like, dude, we need to buy assets. We're making all this money flipping. We need to depreciate it. You know, I'm like, yeah, I agree. So we're like, let's send mail. Like we send mail, successful single family. So we've been sending mail, getting deals that way. So we started pulling car washes, apartments, 50 to 100 unit out on the East Coast, parking lots, kind of anything that might cash flow assets. And we started sending mail. Is that a way that we could possibly find deals? Or
that hasn't been my experience.
How have you been able to?
It's all brokers.
All through brokers. And how have you cultivated those relationships? Because I've talked to some brokers, right? And it's like, who the fuck are you?
Exactly.
Why would we?
Who the fuck are you?
Exactly. I'm nobody. It's like, why would they sell to me when they could they could sell to a guy like you who already has the track record? But you didn't always have the track record though.
Yeah, and it was very, very challenging. There's a reason I don't teach. That's because I don't have answers to questions like this.
Yeah.
Luck has something to do with it. Persistence, perseverance, yes. But at the end of the day, you're right. Somebody has to give you a chance. And how do you make somebody give you a chance? I don't have an answer like, the gurus would tell you, hey, join my team. Then you can go and call brokers and say, hey, my team and I have purchased $250 million of real estate.
Yeah.
That's guru talk. In reality, that doesn't answer your question. I don't have a good answer to the question.
Yeah.
I really, really don't. Even like right now, I finally, after about $200 million of real estate, after all of this, with this all over town, and everybody knows who WhiteHaven is now, and everything else.
It's everywhere.
After all of this, now finally, we're getting traction with some of the A+ brokers in town. The guys who control the institutional
hedge
deal
funds,
flow. The guys who sell to hedge funds, sell hedge fund-owned property, that kind of thing. I had meetings with them 4 and 5 years ago. We got to Phoenix. The first thing I did was set up some of those meetings. And they did exactly what you said. They laughed at me. And finally now we're starting to get the time of day. So yes, it's difficult. No, I don't have a magic bullet. But in a market like this, and let's call Phoenix institutional market. It's attracting a lot of institutional capital. It's number 5 largest city in the United States. It's growing like a motherfucker. It's with high tech and medical, and you know what the economy is like. I mean, it's just off the hook, right? Off the hook.
Crazy.
So, and it deserves to be, because it's a really great place to do business, and there's a lot of companies that are moving in. So it is what it is.
Great place to live. I mean, it hits all the check marks.
It really does.
Besides an ocean.
Well, but
but even that, right? Exactly. You're in San Diego.
So with that being the case, with it being such an institutional market, to break in here is, it's a bitch. It really is. And I don't, I don't know what it would be like if you try to do it on the East Coast. I'm sure there's markets where it would be less difficult because there's fewer buyers looking to buy. But in a market like this, I don't have any magic bullets.
Yeah. I think, though, that's good for people to know. I even say, like, I'm speaking at this event next week, and it's like people that want to get into real estate, learn flipping. Everyone wants like the secret answer. And it's like, dude, I've been getting told to go fuck yourself on the phones every single day for the last 2 years, answering mail calls and this and that. Like, there's no escaping the work at the end of the day. I think you have to kind of go through those learning lessons and kind of learn through your own mistakes. But as far as then, I mean, when you look at this market here, it seems like you're selling some of your assets.
Yes.
But you're also you seem very.
I'm also buying.
Yeah, you're also buying, and
Yes.
you seem very strong about Phoenix in general.
Yes.
I would think you would be refining instead of selling some of these assets. Talk to me about why you're deciding to sell instead of refi some of these.
Sure. I am a syndicator. So I am in a financial services industry.
Mm-hmm.
I collateralize investments with real estate, but really what I do is manage money.
Yeah.
And that's what a syndicator does.
Right.
Okay. So my responsibility is to my partners and my investors. I perceive the business from a standpoint of the highest possible return on a risk-adjusted basis. So I get into an investment to generate a return. And every day of that investment, there's a scale that keeps going, right? And there's two elements that go into that scale. How much potential profit is left? How much risk are we now carrying for that potential profit? At some point, there's an inflection point where I feel that the amount of risk left on the table is greater than the amount of return I can still get without being lucky.
Right. That's what
Okay?
you're saying.
Where I can manufacture it, I can follow a business plan. I don't need necessarily the market to blow up.
Yeah.
Okay? So when I hit that inflection point, I sell because I can't lose partners' capital when I'm making the money.
Right. And in hindsight, I would think, I mean, sure, I'm sure you're doing all the right things, but in this market, the last few years, kind of anything you bought a few years ago kind of turned into gold. That might not necessarily happen in the future. I guess none of us really know.
Exactly.
So you're kind of trying to just mitigate some of that risk.
And our situation really hasn't changed. You know, I just announced today that we sold an asset. We purchased it for $8.15 million. We sold it for $15.5. It had $58,000 of revenue when we bought it. It had $101 last month. So we renovated the entire community. We increased rents by over $400 a month. That's a classic value add kind of repositioning. We purchased that community very close to a 3 cap. I mean, I don't want people to think, oh yeah, Ben came in and he purchased a 10 cap and now he's selling a 3 cap. You know,
those deals don't.
That didn't happen.
No one's finding those deals.
Back in the day, when we purchased that community in 2018, on the existing revenues of $58,000, what we paid was extraordinarily high price. It was literally like 3.2 cap.
Where people like, what are you doing? Like, that's a shit deal.
Are you nuts?
Yeah.
Are you crazy? So that describes to you the process. You know, I don't have to. In fact, we're selling it. We just sold it at a higher cap rate than we bought it for.
Wow.
So while the market cap rate has compressed, we're actually exiting at a high, so the buyer can feel like they're getting a deal against the market, okay? Which is the whole idea of the business plan, by the way. So why wouldn't I sell? Yeah. I've renovated the entire property. I've increased the value. Could I get a couple more $1 million if I sit on this asset? Sure. But I don't know the future.
Maybe not.
I don't know what the Fed's going to do. I don't know what the interest rates are going to do. I have my ideas, but I can't guarantee that. And I don't need to be the smartest guy in the room that says to investors, yes, we have to stay because we're going to make more money. Why? I am doubling their money today as it is. Here you go. Let's find something with more meat on the bone and do the process again and recycle your money that way. Because that way we can control the value add and we can control our destiny to a lot greater extent than staying in this deal.
Yeah, I mean 8 to 16. That's a pretty good flip. I think that's the biggest one we've had in the flip lab. So that's a pretty good one. I'm amazed sometimes. Like when we're looking at buying some of these 50 to 100 units on the East Coast, it's owned. Some of them you see like by just like this one guy, and maybe he's mismanaging it. But I feel like everything out here, it's owned by these companies that like know what they're doing. Where are you finding so much like add value in these port? Like I would just think everything would be like these simple things like, oh, it needs to be renovated, or like they haven't repaved the pool area in 10 years. I would just think like these places would be more on top of that.
Well, but what if it's not part of their business plan? What if when they bought it for the cap rate compression?
And they just wanted to ride out the cap.
Yeah, they're going to ride the cap, compressing down, and then they get out. And furthermore, if they don't do anything, that's part of their business plan. Because why? Because in order to get out, they need a guy like me, and they need to leave me all that stuff to do.
Yeah.
Because that's how I make money. So that's one way of thinking about it. The other way of thinking about it is WhiteHaven, when I say we, I mean WhiteHaven, we go where nobody's gone before. We find opportunities where other people don't see opportunities. I mean, it's been that way for the entire duration of the evolution of our business plan. And that's the whole point, I guess, right? This property that we sold just yesterday, Canyon 35, it's right next to GCU. So, very transitional area.
Sure, right? Yeah.
If it weren't for GCU being there, very transitional area.
Mm-hmm.
So we go in there with a business plan of ripping out all the cabinets, granite, stainless, new this, new that, build a new gym. Who does that?
Kind of competing with all the new, I mean, you drive around right here, it's like new A-class stuff going up every single day.
In that location, to go in with that business plan, people are looking at us like we're crazy.
Yeah.
But
that's
we said it was kind of like, it's 98 units. We understand about the area, but can we find 98 people who make enough money in that 2-mile radius and would like to have something nicer, but they don't want to move away because their family's here or whatever?
Yeah.
Would I do this with a 600 unit in that location? No. Would I do it with a 98 and create a really boutique product for the very few select people that can qualify, can afford it? Sure, that's what we did. And it's turned out very well.
Yeah.
The rents went up from, $700 to $1,100 on the average.
That's great.
That's
and
people are paying just fine, no problem.
Yeah.
Now, are they the majority? No, they are the minority. But we built something nice for those few people in that general vicinity that want it and can afford it. And they love us for it.
Do you find the sellers, are they ever distressed when you're acquiring these? Or is it, you're not really looking for distress?
No.
Like you are in single family, if you want a deal, there's got to be a problem that you got to fix. But when you're acquiring, I would just think there's never really a problem with these guys necessarily.
No.
It's just, you're kind of, maybe they're just done kind of working.
You just have to create the opportunity.
Yeah, right.
Right? There's nothing wrong with what they have. It worked for them. That was their business plan. For us, it can't be the same business plan, so we have to do something different. So everybody is looking for the same kind of quote unquote value add, the same kind of class, if it was that easy, you'd be doing it. Right?
Exactly.
So
that's what I was thinking.
Have to create the opportunity. You have to make it out of nothing.
Like you said, have some balls and, take a risk, do something where other people think you might be crazy, but
right.
you kind of stick to it. And
well, I am crazy. That's a whole another.
So Ben, if people do want to, like you said, if they're that W-2 person, they're making high income and they might want to invest in you, do you take outside money from people to?
Yeah, we raise a lot of outside money. These are all private placements.
What would someone have to do if they wanted to possibly?
They would have to be
into
accredited.
Okay.
That's
Accredited
the first
investors.
Thing. And you can link to SEC definition of accredited. And then you would have to contact us through the website, whitehavencapital.com. And that's that. We walk you through the process. But at this point, yes, accredited only.
And just to clear up on Facebook, you're not mentoring right now. I saw you joking about it.
No, I do not mentor, and I teach as much as I can on Facebook without charging people money.
I see what you're doing.
But I don't. No.
Cool, man. Well, thank you so much for coming in here and giving the audience a sneak peek of your business. Guys, if you guys want to learn more, definitely give Ben a follow. Your website too. What's your website?
WhiteHavenCapital.com.
Okay. Don't you have a personal website too?
I do. JustAskBenWhy.com.
Yeah, a lot of his videos and older podcasts are on there. Once again, man, thank you for coming on the show, and excited to see more, Haven communities going up around Phoenix.
Sounds good.
Right.
I appreciate you inviting me. Thank you.
Thank you.